Hi everyone, I'm Kunal Sodhani once again back with a new episode on currency and the macro dynamics which has been playing around us. First of all, talking what exactly is happening on the domestic front, as we always discuss, is talking about the flows because flows is something which is quite crucial when it comes to dollar rupee. So if you talk about flows and particularly equity flows, we have seen an inflow of around 56,600 crores till now for the month of December. And if you talk about the debt flows, we have seen flows of around 14,900 crores for this month again till date. So put together around 71,600 crores of inflows, which we have seen, in 2023 December month only. I'm talking about. So this is the highest ever inflows in 2023 in a single month, and the month is still, going and not yet over. So flows have been quite positive. If we talk about the FX reserves, RBI has been quite keen in terms of building the FX reserves. The number is $607 billion, as we have seen the last number. And if we talk about the RBI bulletin print also, it clearly indicates that the gross intervention was maybe around $73.6 billion. And if we break down this gross intervention into buy and sell, I think $36.6 billion was roughly around the buy number, and $36.9 billion was approximately sell number. So net intervention has been flattish, but it clearly indicates that RBI's presence has been there on both sides, both on the right as well as the left side as well. Thus, if we see, we have seen levels breaking 83, moving towards 82, 90 odd levels, and we have still seen a bounce back today towards 83.25 to 83.30 band. So RBI has been keen in terms of, they showing their presence into the market. If we talk about the trade deficit numbers, it's quite exciting to see that because we have seen a drop of 35% from the highs which were in October. So in October, the trade deficit number was around $31.54 billion. This time, the trade deficit number came at around $20.58 billion. So almost a 35% drop in trade deficit numbers, which was also one of the reasons why rupee appreciated sharply below 83 levels, apart from the flows or apart from RBI intervention getting offside at that point in time. Uh, if we talk about why these numbers came in lower, because there was a sharp drop in the imports. And what was the number? From $65 billion in the month of October, we saw a drop of towards $54 billion. Plus, exports didn't rise much. Probably they were more flattish. So, thus, overall number of the trade deficit came in lower, which was in favor for us. But what exactly is happening offshore and why we should be a bit more concerned and cautious is because of the crisis which has been happening on the Red Sea. So we need to keep a tab on it because ultimately, if any escalations or geopolitical escalations arrive, obviously it creates a lot of impact on the flows front and also to the currency pairs in return. So that thing has to be kept in mind. Brent crude prices did sharply bounce from almost around $72 per barrel towards $80 per barrel. We saw this move. If we talk about the Chinese yuan still remains morely on the consolidation phase at around 7.15 levels. What's happening globally when it comes to Fed? The Fed members have been still dovish. There are mix of people, but I think the majority have been dovish. Fed Powell has also been dovish about it, and which is a reflection in the 10-year US Treasury yields. If we see those yields, they are trading around 3.87%. In reflection, if we see dollar index also has seen a move towards left towards 102.30 odd levels, with 101.60 acting as a decent support at this point in time. While if only a bullishness in the dollar can come across if we see a break of 103.20 levels, on the DXY. Apart from it, if we talk about what exactly has been, importance which has to be kept in mind is the policy which will be the upcoming policy on the FOMC. So before our own monetary policy of India, we have one more FOMC lined up on 31st of January. So that will be quite crucial to watch out in terms of the interest rate trajectory. On the other hand, ECB has been, a bit dovish, but there are several members who have been speaking of the fact that it's too early to go for rate cuts. So they are not that keen, probably in terms of the hawkishness of rate cut. So that has not been seen from those front. Dollar rupee, again, as I said, importers did get a chance below 83 levels to cover some of their exposure. We also discussed, there will be moments where there will be opportunities for both an exporter as well as an importer as well. Obviously, a trader can manage both the ends. So importer got a decent opportunity. Some did pick up, I guess. But some obviously feel that obviously when there's a down move, there could be a sharp down move. So Personally, I believe the consolidation phase may still continue for some more time between 80 to 80 to 83 half levels. These levels may consolidate for some more time. So the only suggestion or the only advice could be that for importers, any levels below 83 or towards 80 to 90 are decent levels to hedge some portion, with forward premiums not being too much of a, that they're not too much high. So it is still in the favor. Even if you go for options, the IVs are very less, for around 1.5 to 2.5% the implied volatility. So I think it is a decent level for importers. While for exporters, keep on hedging in a staggered manner, and not trying to high, probably, high 84, 85 levels, which possibly may take a lot of time maybe. So keep on hedging in a very staggered manner. So that's all from my side, friends. Wishing you all a very happy investing session, and wish you make a lot of money. And importantly, when you're into business, don't make currency as your business. Just focus on what the business is. Let currency be just a mitigant to tool, and mitigate your FX risk only. Thank you so much, everyone. Thank you.